Turkey is different from anywhere else. The idea that the Turkish central bank has been selling gold is actually wrong. The whole of the gold scene in Turkey was a bit of a mystery. And some time ago, when I was in Istanbul at a conference, I spoke to some bankers about this, and I asked them to explain it to me. I can't remember the details too much, but I think very, very briefly, what happens is that the commercial banks have a lot of customers who own gold, and they store that gold with the banks. And that, if you like, works almost like an unallocated gold account, whatever. They take that gold and they deposit it in the central bank's vaults. The central bank returns that as if it was own gold. And it probably is in the sense in that it is probably leased to the central bank for whatever reason against Turkish lira. So you've got swaps going on all the time. And so all you're seeing really is, and this is the difference between the way we account in the West, all you're seeing is you're seeing the ebb and flow of gold between the commercial sector and the central bank. This is not gold which is going on to the international market because, the Turks are trying to support the lira. I mean, I haven't seen them do anything really to support the lira. I mean, it's one of the worst currencies in the world. I mean, how do you explain a currency which goes down all the time, and yet they continue to accumulate gold, or appear to continue to accumulate gold, and then suddenly they turn around and want to support the currency by selling gold? Come on, this is nonsense, complete nonsense. So, I mean, I thought that's the first thing. Don't be confused by this. Now, what we do in the West is, if, let us say, a central bank leases gold into the market, it records it still as its own gold. It doesn't record the leasing. But somebody else will record the leased gold as their own property, which, of course, it is in law. If you lease gold, it becomes your property during the duration of the lease. So you get double counting. You could almost say that the Turks they do it a bit differently, probably slightly more honestly than we do, in fact. So all this stuff about selling gold in order to whatever, is actually nonsense. They will keep control over it. I mean, it's as simple as that. It hasn't come onto the international market. So I think that's the first thing. The Chinese banks are now heavily restricting the availability of physical gold to their customers. I mean, the reports are that they've limited it to something like 600 kilograms, I think, something like that. I mean, there is a severe restriction, and it's sold out within a minute of 9 o'clock in the morning. Bear in mind that household savings in China are roughly 30 to 35% of GDP. That means that every year, households are putting aside in savings the equivalent of $5 or $6 trillion. $5 or $6 trillion. Where does that go? Property? No. Yesterday's story. Stock market? Some may be. I mean, our stock markets have been rising and rising and rising. Shanghai did absolutely nothing, but it sort of doubled recently. So there might be a little bit of it going in there. The answer is that the majority of that has been going into bank deposits, because banks have been quite constructive, if you like, in terms of helping savings in an environment of declining interest rates, because the People's Bank of China has been lowering its reference rates quite severely. But all these banks offer at the same time gold accumulation accounts. So you can, as a household saver, if you like, housewife, whatever, you can tell the bank, I want to move 500 yuan a month into a gold accumulation plan. There's an awful lot going into these gold accumulation plans. Now, the reason that you don't really see this is that the gold that backs this doesn't leave the Shanghai Gold Exchange vaults. It remains within the system. The way the vaulting system works is that anything that comes out of the vaults, if it goes back into the vaults, it has to be recast to guarantee the purity of all the gold in the vaults. So there is absolutely, there is a disincentive, if you like, for the large Chinese banks to take gold out of those vaults. So they will back their gold accumulation plans by holding physical gold in the vaults. Now, I don't know whether they run a completely covered position? Probably not. I don't know. In other words, there might be an element, if you like, of unallocated, like it doesn't exist, backing these vaults. I mean, obviously it's unallocated because there's a huge great lump of gold in the vault here, backing accounts here, but we don't know that they're 100% backed. But you can see that there is a squeeze developing through, if you like, household demand, nothing else. And I think what goes on in futures markets and all the rest, it's just noise. It really is. Just think, $5 to $6 trillion equivalent. Got to find a home. And where else does it go? And that's why you've got to drift. I mean, gold is, you want gold in size, forget it. You're not going to get it. It's all gone. It's all sort of pre-demanded. You join the queue. And the same is true in silver. That's been happening as well. And again, we're talking about, in the case of silver and gold, but it's probably more pertinent in silver in a sense. You've got 1.5 billion Indians, you've got 1.5 billion Chinese. 3 billion souls. Admittedly, some of them women, children rather than women, some of them children. So, but you can see that the scale of potential demand here is just so enormous. It's not surprising. There's none left over. So don't be late at the party. If you're getting out of credit, don't look gift houses and the horses in the mouth, such as banks trying to knock the price so that they can close their short positions. They're trying to buy they're trying to buy gold off you, basically. So you have to ask yourself, why do they want my gold? It's clear to me that you could say this is almost a proxy war between China and Russia on the one hand and America on the other, with Iran basically fulfilling the role of a successful Ukraine. And America will be driven out of that, there's no doubt. The consequences of this are that this is not going to end very quickly. I would say that for most of this year, Hormuz will be shut. I think that's got to be your working assumption. The consequences for prices are being underestimated. I mean, I'm just drafting an article on this, which I'll publish later on today on my Substack. But the IMF thinks that in the US, inflation will rise to 4% CPI, but core inflation won't go above 3%. What? This is, I think this is a measure, if you like, of where intellectually, the sort of the investment banks, the strategists, the investment strategists and the economists, and all, that's where they are at the moment. And they're having to rethink this. And the consequences, obviously, are very, very negative for currencies, because what we're talking about, what is inflation? If you're talking about inflation of prices, actually, it's loss of purchasing power of the currency. And it's that people, foreigners initially, will be looking for recompense for. If you're going to continue to hold dollars and its purchasing power is going down, then you're going to need a higher yield on your bonds or your deposits, or better returns on your equities, or whatever it is. Without that, you sell the currency down. But the problem is, what do you sell it for? Because all other currencies, all the G7 currencies anyway, are in the same boat. So you've got this sort of slightly unreal situation where everything is crashing except markets. But that will come, and I think that's going to happen, I think, in the coming weeks. I mean, you've already seen, for example, look at the Japanese stock market. That definitely is on the way down. I mean, you could argue how far down it'll go. That's not the point. But the point is that it's lost its upward momentum, and once it's lost its upward momentum, we're talking about the very minimum, a fairly significant correction. Other markets will follow, because Japan is the major exporter of capital to G7 nations, including America. I mean, in two ways. First of all, directly through its insurance companies and pension funds investing for higher returns. And also because the Bank of Japan suppresses interest rates. Their reference rate at the moment is 0.75%. And that's the highest it's been for 30 years. The carry trade on the back of this is enormous. It's just built up and built up and built up over time. So what we're looking at is Japan actually is sort of pulling the blanket up like that, out of the whole system. And the whole system is going to it's going to collapse in effect. That's the risk. And I don't see anyone